Hi students, welcome to MI Academy. We were discussing the grade 10 business studies, chapter 5 accounting equations. In our last video we discussed what is accounting equation and how to construct an accounting equation. Then we discussed the situations that change the equity. So now we will be discussing on the business transactions affecting the accounting equation. If you have not still subscribed to MI Academy, then click the subscribe button and turn on the notification bell icon to all, so that you can watch my upcoming videos without missing. So this is our first example. Nihara started a business to repair computers. The following transactions are given to you for the first month of the business. Invested rupees 500,000 as the capital. Obtained a bank loan of rupees 200,000. Deposited rupees 100,000 in a fixed deposit account. Earned a cash income rupees 60,000 from computer repair rupees. Paid rupees 10,000 as the monthly rent of the business. Nihara withdrew rupees 20,000 from the business for her private use. Purchased equipment at rupees 100,000. Paid rupees 5,000 of the telephone bill of the month. Nihara invested in additional capital of rupees 50,000. Settled rupees 20,000 of the bank loan. Then now we have to show the impacts of the above transactions in an accounting equation. So first we have to identify how many assets are given. So here there are 3 assets, number 1 cash, number 2 fixed deposit, and number 3 equipment. Then next we have to identify how many liabilities are given. So here there is only one liability, that is bank loan. So next we have to draw a table containing the equation, dividing the columns for assets, liabilities, and equity. You have to draw it like this. For equity we no need to divide columns. So now let's record the transactions in the accounting equations. Our first transaction is Nihara invested rupees 500,000 as the capital. So from this transaction we know that we receive cash 500,000, therefore we have to add 500,000 in the cash column under assets, and equity column. We are recording in both the sides since they should be equal. So now you can look here, both sides are 500,000, therefore they are equal. Then the second transaction is obtained a bank loan of rupees 200,000. So now we have to add 200,000 under bank loan column, and since we are receiving that 200,000 as cash we have to add 200,000 under cash column. Next one is deposited rupees 100,000 in a fixed deposit account. So now here rupees 100,000 is taken from the cash and deposited in a fixed deposit account. So now we have deduct 100,000 from cash and add in fixed deposit column. Since both are assets, plus 100,000 and minus 100,000 becomes 0, and in that side also it's 0, therefore both sides are equal. Next one is earned a cash income rupees 60,000 from computer repair rupees. Here we are receiving cash of rupees 60,000 as income, so as you all know we have to add 60,000 in cash, and add 60,000 in equity. I hope you remember that I taught in last video that income should be added to the equity and expenses should be deducted. Next paid rupees 10,000 as the monthly rent of the business. So here 10,000 is taken from cash and monthly rent is paid. Therefore here 10,000 is deducted from cash and also equity. So both sides are equal. Then Nihara withdrew rupees 20,000 from the business for her private use. So here Nihara took rupees 20,000 from the cash to her personal use. This is known as drawings. This is also was taught in last video. Then here 20,000 should be deducted from cash, and also equity. Then the next one is purchased equipment at rupees 100,000. So here rupees 100,000 is taken from cash and an equipment is purchased. Therefore cash minus 100,000, an equipment column is added with that 100,000. Next one is paid rupees 5,000 of the telephone bill of the month. Here 5,000 is taken from cash and telephone bill is paid, therefore cash minus 5,000, and equity minus 5,000. Next Nihara invested in additional capital of rupees 50,000. Now here we are receiving rupees 50,000 of cash, so add 50,000 under cash, and since Nihara investing it as additional capital, add 50,000 under equity. And the last transaction is settled rupees 20,000 of the bank loan. Now here rupees 20,000 is taken from cash and bank loan is paid. Therefore cash minus 20,000 and also bank loan minus 20,000. Since we have settled it, our liability is decreased. Now let's balance them all under relevant columns. So equipment 100,000, fixed deposit 100,000, cash 555,000. Then equity 575,000, and bank loan 180,000. Now if you total the assets, it should be equal to equity plus liability. Yes, it's equal. Now let's go with another example. The following balances were extracted as at 1st of August 2022 from Sandamina's business. The balances of the assets as at 1st of August 2022 are: furniture 300,000, stocks 200,000, debtors 100,000, cash 200,000. Then the balances of the liabilities as at 1st of August 2022 are: bank loan 300,000, creditors 100,000. The following transactions occurred in the first week of August 2022. Purchased goods at rupees 100,000 to sell. Sold goods which were purchased at rupees 100,000 for rupees 125,000. Settled rupees 50,000 of the bank loan. Paid rupees 10,000 as salaries. Sandamini withdrew goods at a cost of rupees 20,000 for her private use. Purchased furniture at rupees 50,000 for the use of the business. Purchased goods at rupees 200,000 on credit basis. Sold goods at rupees 100,000 on credit basis. These goods had been purchased at rupees 60,000. Received rupees 80,000 from debtors rupees. Paid rupees 50,000 to creditors rupees. So now you all know if we want to show how the above transactions affect an accounting equation. The first step, we have to identify the assets and liabilities given here, and then to draw the table with respective columns. So here there are 4 assets, they are furniture, stock, debtors, and cash. And we have 2 liabilities, they are bank loan and creditors. So now we can draw the table like this. Then first of all you have to record the opening balances given here. So first under assets column we have furniture 300,000, stocks 200,000, debtors 100,000, cash 200,000. Then under liabilities we have bank loan 300,000, and creditors 100,000. But they have not given the opening balance of equity, so we have to find it. So we know that assets equal equity plus liabilities. Then we can write like this also, equity equals assets minus liabilities. So if we sum up the total assets, that's going to be 800,000, and total liabilities is 400,000. So 800,000 minus 400,000 equals 400,000, that's the opening balance of equity. So now we can record all the opening balances of assets, equity, and liabilities in our table. Now we can record our transactions one by one. Then the first one is purchased goods at rupees 100,000 to sell. So 100,000 is taken from cash and purchased stocks to sell in the business. Then minus 100,000 under cash, and add 100,000 in stocks. Then the next one is sold goods which were purchased at rupees 100,000 for rupees 125,000. Now here the goods worth rupees 100,000 is sold for rupees 125,000. So here rupees 25,000 is profit, an income. And we are receiving 125,000 of cash. So here, since goods are going out from the business, minus 100,000 in stocks, and plus 125,000 cash, so that 25,000 of profit is also added under equity. So now you can see the both sides are equal, that is 25,000. Next transaction is settled rupees 50,000 of the bank loan. So we know here 50,000 should be minus from cash. And also bank loan should also be minus 50,000. Next, paid rupees 10,000 as salaries. Here salaries is an expense. You all know expenses should be deducted from equity. So 10,000 minus from equity and cash. Then next is Sandamini withdrew goods at a cost of rupees 20,000 for her private use. In the last example we saw that cash is withdrawn from the business by the owner, but in here stocks are withdrawn. Then we have to deduct 20,000 from stocks because it has been taken by the owner, and also deduct 20,000 from equity because it is drawings. Then purchased furniture at rupees 50,000 for the use of the business. So here 50,000 is taken from the cash and furnitures are bought. So cash minus 50,000, and add 50,000 to furnitures. The next transaction is purchased goods at rupees 200,000 on credit basis. So here stocks are bought but the cash is not paid still, they will pay later. So we know that creditor is a liability of the business. So we have to add 200,000 in creditors column, and add 200,000 under stocks since we have bought it. Then sold goods at rupees 100,000 on credit basis. These goods had been purchased at rupees 60,000. So here goods worth of 60,000 is sold for rupees 100,000, keeping a profit of 40,000, but here we don't receive cash because we have sold it in credit. So here we have add 100,000 under debtors, and add profit 40,000 under equity, and deduct 60,000 from stocks since it has been sold. Then next received rupees 80,000 from debtor rupees, so now we are receiving a payment of 80,000 from a debtor who bought goods on credit from us. Now we have deduct 80,000 from debtors, and add 80,000 to cash since we have received cash. Next paid rupees 50,000 to creditor rupees, here we are paying to the creditor from whom we bought goods on credit. So here we have to deduct 50,000 from the cash and creditors. So we have now done with the recording of transactions, now we have to balance them. So the closing balance of furniture is 350,000, stocks 320,000, debtors 120,000, cash 145,000. And then equity 435,000, bank loan 250,000, and creditors 250,000. Let's look at another example to get a further understanding. The following balances were shown as at 1st of July 2022 of Rewanthi's business. Motor vehicles 500,000. Stocks 200,000. Cash 100,000. Bank loan 200,000. Creditors 100,000. Capital 500,000. The following transactions occurred in July 2022. Owner invested rupees 200,000 as additional capital. Paid rupees 20,000 bank loan installment including rupees 2,000 as the interest. Purchased goods at rupees 100,000 on credit basis. Paid rupees 50,000 to creditors. The owner gave rupees 200,000 worth of his private motor bicycle to the business. Sold goods which cost rupees 100,000 at rupees 150,000 on credit basis. Paid rupees 10,000 for insurance. Received rupees 70,000 from debtors. Paid rupees 5,000 from business for the electricity bill of owner's house. Received sales commission income of rupees 10,000. So from up to now discussed in this video, you all know if we want to show how the above transactions affect an accounting equation. The first step we have to do is identify the assets and liabilities given here, and then to draw the table with respective columns. So we can find 4 assets in this question. They are motor vehicles, stocks, debtors, and cash. Then the liabilities are bank loan and creditors. Then we can draw the table with respective columns. So after drawing the table, we have to record the opening balance given. But here we no need to calculate equity because they have given the capital balance. But if you have any doubt, you can insert the values into the equation, assets equal equity plus liabilities. So here you can see the total asset is 500,000 plus 200,000 plus 100,000, is 800,000. Then equity 500,000 plus liabilities 200,000 plus 100,000, is 800,000. So you can see they are equal. Now let's record the transactions. First one is owner invested rupees 200,000 as additional capital. So you all know if an additional capital is invested, it should be added in equity, and added also in cash since it is received in cash. Next one is paid rupees 20,000 bank loan installment including rupees 2,000 as the interest. Guys, now here 20,000 is taken from cash and paid bank loan and interest 2,000, so this interest 2,000 is an expense. And the balance 18,000 of bank loan is only settled. So as you all know, because 20,000 is taken from cash, we have to deduct 20,000 from cash. And since 18,000 of bank loan is settled, we have to deduct 18,000 from bank loan. And interest 2,000 is an expense, it should be deducted from equity. So now both sides are equal. Next one is purchased goods at rupees 100,000 on credit basis. Here you all know we have to add 100,000 in stocks and creditors, because stocks is increasing and our liability is also increasing due to purchase in credit. Then paid rupees 50,000 to creditors. So 50,000 should be deducted from cash, and since paid to creditors our liability is decreasing. So 50,000 also should be deducted from creditors. Next, the owner gave rupees 200,000 worth of his private motorcycle to the business. This also like additional capital where owner is investing, but here it's not cash, it's a motorcycle, it's also an asset. Therefore we have to add 200,000 in motorcycle, and equity. Then sold goods which cost rupees 100,000 at rupees 150,000 on credit basis. So here stocks worth rupees 100,000 is sold for rupees 150,000. Here profit of 50,000 is earned. So deduct 100,000 from stocks, and add 150,000 under debtors because it's sold on credit, and add up 50,000 of profit income from sale of goods under equity. So you can check whether the both sides are equal. Yes, it's equal. Next transaction is paid rupees 10,000 for insurance. So here from cash deduct 10,000, and also deduct 10,000 from equity since it is an expense. Then next is received rupees 70,000 from debtors. So here we have to deduct 70,000 from debtors and add to cash. Next paid rupees 5,000 from business for the electricity bill of owner's house. This is like drawings because electricity bill of the owner's house is paid through business cash. Then we have to deduct 5,000 from cash and equity. Then next received sales commission income of rupees 10,000. Here 10,000 is added to cash and equity. So that's all. Now we have to balance them all. Total of motor vehicles is 700,000, stock 200,000, debtors 80,000, and cash 295,000. Then equity is 943,000, bank loan 182,000, and creditors 150,000. Then if we see the total assets, it's 1,275,000, and equity 943,000 plus liabilities 332,000 is also 1,275,000. So both sides are equal. Then up to now we have studied how to add the transactions in the accounting equations. But you also have to know how to identify the transactions which have been presented in the accounting equation. See the following example. The following accounting equation of Alika's business shows the impacts of transactions occurred in January. And also they have given an additional information, the owner has not made drawings in the month. Then first they have given the opening balances of the assets, equity, and liabilities. Then on January 3rd, here we can see 100,000 has been deducted from cash and creditors and 200,000 is added to stocks. So we know stocks can be bought in cash or credit. Here they have bought in both the ways. So we can write the statement as purchased goods at rupees 100,000 on cash basis and also for rupees 100,000 on credit basis. On January 7th, here 20,000 is deducted from cash and equity. We know that equity will decrease only if there is an expense or drawings. But here they have said there is no drawings here. So we can conclude as paid rupees 20,000 of an expense. January 10th, cash is decreased by 60,000 and equity decreased by 10,000, and also bank loan is decreased by 50,000. So we know that if equity is decreasing in this case it will be only due to expense. So we can conclude that, paid rupees 60,000 of bank loan installment including rupees 10,000 as the interest. January 14th, stock is decreased by 200,000, debtors increase by 300,000, and equity is increased by 100,000. So we can identify that stock's worth of 200,000 is sold on credit for 300,000, so here there is a profit of 100,000 which is added to the equity. Then we can say, sold goods which cost rupees 200,000 at rupees 300,000 on credit basis. January 18th, here cash and equity is increasing by 300,000. We know that equity increases with income and additional capital. Since there is no any statement on income given here we can assume it as additional capital. Then we can write it as, invested rupees 300,000 as additional capital. January 21st, here cash and creditors is reduced by 100,000, so we can say, paid rupees 100,000 to creditors. Then on January 25th, 400,000 is deducted from debtors and added to cash, so in this case we can say it as, received rupees 400,000 from debtors. So that's all in this chapter. I recommend all of you all to do more questions and get practice, so that these will be simple for you. Please give a support to us by subscribing to MI Academy, and also please, like my videos, and add up your questions and doubts in the comments. I will try to reply them as soon as possible. Share the videos with your friends, and help them to learn quickly and easily.